What is the best route to financial freedom? Is it buying Bitcoin in 2011? Is it owning a business that is sold at a massive valuation? Is it real estate? If so, is it being an owner-operator of real estate or being a passive investor? Today, we're joined by someone who actually agrees with me that the passive approach to investing is a spectacular strategy to becoming financially free. In fact, he spent a lot of time teaching people why this is the case. Now, with that in mind, I recently saw an Instagram clip where someone asked Gary Vee how to get more passive income. He specifically said that he wanted this passive income because he was sick of working and living in Sweden and wants to move to Mexico, live on a beach, and not have to work anymore. Gary took a second to see if he was actually serious, and then he was. And he proceeded to tell him, look, the easiest way to not get on a beach in Mexico is to think that, quote, passive income is a thing. Basically, it's a myth. Other than having a really large investment portfolio that is invested in stocks that you can just invest and then never touch it again until much later down the road. Or the other option is to invest in real estate that actually generates passive cash flow. And that's pretty much all he said. Now, for most people, the key takeaway of that clip was that looking for passive income is basically a myth, and that you shouldn't be trying to spend your time really focusing on, quote, passive income, especially if you're thinking about it like you're not going to have to work. Well, for me, the other part of his point is actually what's most important. Here's what it is. If we know that real estate generates passive income, and passive income is your goal, and real estate is one of the only ways to actually generate passive cash flow, why in the world isn't everyone focusing a significant amount of their time learning about real estate? Well, it's not just me that thinks like this. That's exactly the way our guest thinks about this whole situation as well. So in this episode, we're going to discuss passive cash flow and financial freedom. First of all, we're going to talk about why our guest has focused so much of his brand surrounding the topic of financial freedom and what that phrase means to him. We're going to talk about whether or not our guest invests passively in other people's deals despite being a sponsor himself. And we're going to discuss what our guest sees as some of the most common problems, some of the biggest hurdles for people that are in pursuit of financial freedom that cause them to have challenges or make them not be able to accomplish their goals, as well as, of course, how to overcome these hurdles, how to avoid these challenges, how to learn from their mistakes. All right, quick question. Do you enjoy this program? Are you a fan of this program? Do you like coffee? If so, you're about to get the deal of a lifetime. Have I got your attention yet? All right, here's the thing. I am confident that I have found the best coffee on the face of the earth. This is not an exaggeration. I have tried many, many brands, almost all the major brands out there, and a lot of brands that most people haven't heard of. But I literally believe that Thrive Market's Breakfast Blend is by far my favorite. And I'm not just saying this. And yes, I am an investor in the company, but I'm serious. I'm about to put my name on the line here. So if you're listening to this right now and you haven't yet left a review for the program, now is your opportunity to win some coffee and do the show a favor. So starting today, the day that this episode is launched and continuing until the next episode, not the next Monday Minutes, the next real interview episode, 7 days later, the first 3 people that leave a review in iTunes, screenshot the review, email it to me at info@asymcapital.com. The first 3 people that do this, starting right now, get a free 12-ounce bag of this Thrive Market coffee. That's right. Only the first 3 people. So go to iTunes, screenshot the review, leave a review. It doesn't have to be a 5-star review. Make it honest. Send me a screenshot at info@asymcapital.com, and you're going to get 12 ounces of this coffee. Just do me a favor. Let me know if you want ground or whole bean. I'm telling you, it's the best coffee I've ever had. All right. Hope you enjoy the episode. How's it going, everyone? Our guest for today is Michael Blanc, who is an entrepreneur, author, and CEO of Nighthawk Equity. His book, Financial Freedom with Real Estate Investing, is an Amazon bestseller, and he's also the host of the Apartment Buildings Investing podcast, which is a really awesome resource if you haven't found out about it. It's on iTunes, really great reviews, great stuff, great guests. He's helped investors purchase 5,000 multifamily units valued at $215 million through his content and training programs. And as CEO of Nighthawk Equity, he controls $43 million in performing multifamily assets all over the U.S. and has raised over $12 million of equity. Michael, it is an honor to have you on. Thanks again.
Hunter, great to be here.
So, in the real estate sector, which I know it's a massive, massive sector, but I feel like there's like 10 guys that their name just always pops up. And you are certainly one of those guys' names. And when I think of your name, one of the main things I think about is that you have put a lot of effort towards helping people achieve what you and I refer to as financial freedom. And this is like, you are the guy when it comes to financial freedom. So we're going to get into a lot of topics today, but one of the first things I want to discuss with you is your personal journey towards financial freedom. What was really the motivating factor for putting you on that path? And then at what point did you realize, man, I got to share this with everyone. I got to motivate people and share the playbook that resulted in me getting to where I am today?
Yeah, it's probably like a lot of people, and the short answer to that, it was the book, The Rich Dad, Poor Dad, right? That's the book that kind of changed everything to me. And at the time, I was flush with money from a software IPO. I have a software background. I was in the right place, right time in the late 90s and joined a software company and IPO'd in 2000. Put a bunch of money in my pocket. Not enough money to sit on the beach for the rest of my life, but certainly a good amount of money. So when I picked up that book, I was like, wow, I'm such an idiot. You know, it's like it doesn't matter what my salary is or how much money I have in the bank. It's how much passive income I have, because until that equals or exceeds my living expenses, I'm actually not financially free. And I thought I was in pretty good shape, which I was, but I wasn't financially free. So I basically bagged my 15-year software career and decided to pursue this thing called financial freedom. And I decided to do everything at once, Hunter. So I learned how to trade stocks and options. I flipped a couple houses. I negotiated some short sales. I took an apartment building boot camp. I took a house flipping boot camp. My big idea, though, was restaurants. And as misguided as that was, it was because I was surrounded by franchisees who were like, well, it costs this much to open. You're going to hire someone to run all these restaurants, and you're going to sit back and count the passive income. I'm like, ding, ding, ding. That's my keyword. And that was my big idea. So I went all in and I plowed my entire net worth into these restaurants, which was a good plan at the time, but the recession kind of changed that quite a bit. Long story short, I subsequently lost my IPO millions in the restaurant experience and clawed my way out with real estate. In my case, it was flipping houses. And that's when I had to learn how to raise money because I didn't have any of my own. So my journey to financial freedom was very indirect until I figured out of all the shenanigans I've done. And I also got into an apartment building, and one day I woke up and I said, okay, what am I doing here? This is insane. Like, I made a bunch of money through really no effort of my own. And then I lost all the money through all of my effort. And I was like, man, of all the things I've done, what could I have done differently? What can I really do now to be financially free? And I literally kind of did a pros and cons on all the things I've done. And the thing that came out ahead every single time was apartment buildings. It checked off so many different boxes. And I started studying it. I started blogging about it. I started meeting with other people about it, and kind of one thing led to another. So today we're one of the leading authorities in helping people buy apartment buildings with focus on raising money to become financially free. And I figured out, a few years ago that also there are the passive investors who have the same desire. They want to quit their jobs. They want to quit their partnership, their medical practice, whatever the case may be. It's just that they have some money and invest, but the vehicle is exactly the same. And so this is why we help active investors become financially free and also passive investors become financially free.
Okay, got it. And this is actually something that I have debated before on Joe Fairless's conference, because I actually think that the passive approach to investing is actually an incredible vehicle for achieving that financial freedom. I think that, if you took a straight up passive approach right after that IPO, for example, it's very likely that you could have been better diversified, and maybe when the recession happened, you wouldn't have suffered such a catastrophic and probably traumatic situation.
Clearly.
So definitely something that I wanted to talk to you about today. So when most people come to you and they're saying, look, there's probably a lot of different people out there, a lot of different backgrounds, a lot of different situations, a lot of different portfolio sizes. Are they in tune typically to the fact that they can convert, a net worth to passive cash flow through passive investing? Is that becoming more popular, or is the main source of their financial freedom typically saying, look, I want to be an operator, I want to buy an apartment, I want to raise money from other passive investors?
A little bit of both, but I can tell you I've started interviewing passive investors who have become financially free on my podcast, and it never starts out that way. It starts off with some kind of discontent about the stock market. I can't live with the volatility. I don't like paying the taxes. I can't make any reliable financial projections anymore. And they're seeking, right? They're looking at alternative investments. And then they come across these syndications. They're like, it seems to be very interesting. I just don't know enough about it. Let me look into it a little bit more. And so they'll invest essentially as a diversification strategy.
Right.
And then once they go through one, they're like, the light bulb goes off. And they're like, holy cow, hold on a sec. You mean I can generate passive income off these 50,000 with 100,000 I just invested? Well, holy cow, what if I just invest more? And they start doing math in their head. They're like, wait a minute, if I invested X $100,000, I would get Y passive income. I'm not paying taxes on it, and I get long-term appreciation. And that's when the light bulb goes off and they kind of go, oh my gosh, this could be my way out. And that's really, really exciting. There's also a path into the active side. We can talk about that later, but typically it doesn't start off that way. But once someone kind of feels it, experiences it, they definitely transition into that line of thinking.
Okay. And are you seeing that it's becoming more popular in terms of the passive approach? Because I have noticed, obviously, the popularization of the podcast on the topic have really opened up the doors for that. I feel like the financial sector as a whole is going through a massive shift. Are you feeling that as well?
Yeah, absolutely. I even see it for myself. I started creating educational content around this probably 7 months ago, and I kind of discounted it a little bit. Everybody, we're all educating the general public. I mean, look, the quote market for this, the audience for this is massive. It's anyone who has any money to invest in the stock market. That's really our audience. And there's trillions and trillions of dollars out there. And so the audience is huge. So while sometimes we think, oh my gosh, we're all competing with each other for the holy dollar, really, it's not at all. Because what we're doing collectively, including yourself, you mentioned Joe Fairless, we're all educating the masses. And so now we're getting this buzz going in these investor community. People kind of going, I've heard about this syndication thing, and it's starting to get more and more popular. And it's a good thing. It's a good thing not only for us who have commercial real estate investments, but it's really, really good for the investor, because these syndication vehicles are so much better than anything you can find in the stock market.
Yeah, I completely agree. And I can also tell you that the level of sophistication, the education that people like you and others have put out, it's drastically increased the amount of sophistication that these investors have. And so previously, a due diligence process was basically, talking to the sponsor maybe for 30 minutes and making a decision to invest. And especially back then, the valuations were so low, that was actually okay. But as we get late in the cycle, I've actually seen that now the educational content has really changed. And I can tell from just the conversations I'm having with passive investors, where it used to be going from, hey, so here's what a mobile home park is, here's what the business plan is, to questions like, what's the debt service coverage ratio? What's the term of the debt? How do you kind of account for the nearby 2-bedroom apartments in comparison to what the lot rent is? Things like that started happening. It's like, wow, these are like, it used to take me about a year before I even knew to ask those questions, but now you can expedite that process listening to podcasts, especially at like 2x speed or whatever. So I'm actually really liking what I'm seeing in the space, and I'm thinking it's taking place at a perfect time. So, first of all, I want to commend you for playing your role in that, because you definitely have. So let's talk about kind of the transition here, because I think a lot of people think of passive investing as, okay, I've got these millions of dollars. That is because I've already made these millions of dollars. Is there a way to kind of create kind of a hybrid approach where you have a passive investment job, so to speak? Like, what have you created, or is there any educational content where you've talked about kind of building a job around these passive investments as opposed to being a operator yourself?
Yeah, absolutely. If for someone who starts off passive, they get the bug and they like it and they just talk about it to their friends, and what happens in many cases, not all, but many cases, they essentially become evangelists for these syndications, and they can become capital raisers. And so what happens is these capital raisers, because they have the ability to attract money, because they've invested themselves and know the process, and more importantly, they're really super enthusiastic and excited about it, they share it with other people. They begin to formalize that into a strategy, and they essentially joint venture with operators. So operators are people like me and people who have deals, and they're syndicating deals. And we're always looking for more capital. So sometimes we can joint venture with someone like that, and they might be able to bring in $1 million or $2 million or whatever the case may be. And that is a fantastic way to transition from a passive role into an active role, really doing what they're already doing, which is passive investments and helping other people do the same. So we're seeing a lot of that. It's not necessarily a requirement. There are plenty of people who just invest passively, and they just invest everything that they save into syndications. They might have a cash out refinance, and reinvest that. There might be a sale to reinvest in that. And so it's certainly not a requirement, but we see a good number of people who then do transition into this active way at becoming a capital raiser.
Yeah, I agree. And, one of the things that I've noticed is that if I do talk to investors, most of the time they're already well on their way to this passive approach to investing. Part of that is because of the popularization of it. Part of the fact that our particular podcast caters to a slightly more sophisticated, advanced investor. So it's usually not the first podcast that they find. But when I do talk to passive investors that just recently got exposed to this, they're like, wow, I wish I'd known about this 10 years ago. I will say, if you're listening to this and you haven't made your first passive investment, or you're still contemplating it or something like that, do not feel like you have missed the opportunity in the passive world. The whole point that Michael and I have always been saying is that the vehicle itself is so preferable. One of the reasons why is that there's always an opportunity for a lot of reasons. One of those reasons is that when you invest in complicated asset classes like commercial real estate, the GP, the sponsor, can bring so much to the table that they can usually make up for the fact that they're participating in the deal. And that can generate asymmetric returns in all stages of the cycle. And I'll tell just a brief story about this. By far, when I entered the space in 2010 or 2011, everyone was telling me this is the best time to invest in real estate in the history of the United States. There's some truth to that. The difference, though, was that by 2014, 2015, the deals I saw were actually much better because I understood the space much better, and my education and network grew much more significantly. So if you focus on education, you're going to get there. Now, I just wanted to ask you, actually, so you are a GP. Do you also passively invest in deals?
Well, we try to invest as much money as we can in this vehicle. Sometimes we can't. We need to make sure we maintain a certain amount of liquidity for loans,
right, and
things of that nature. But there's no reason that I would invest any of my money in the stock market, right? I think the only exception would be if I have an IRA from the legacy days, which now, of course, I'm not adding to. But I did have an IRA, and that I do have to invest with other operators. I can't invest that in my own. So when I passively invest, I will tend to invest in my own deals, obviously, because I'm in those deals.
Sure. And that's actually a good point. So I think that's a pretty good strategy. Two things. Number one, a lot of people make a big deal about the co-invest for sponsors. You need to be cautious about that because, to Michael's point, there is a high demand for liquidity for sponsors in order to apply and get these big 7-figure, 8-figure loans. But to your point, you can't invest in your own deals through a self-directed IRA. So it's a good reason to be diversified via that self-directed IRA into other operators' deals. So give us an idea of some of the deals that you typically invest in within that self-directed IRA.
Well, I haven't done it much. Like I said, I never had much, so I'm probably the wrong person to ask.
Okay.
But we have a good number of investors, as you do, that invest in our deals using their IRA.
Okay, got it. So a question that I get a lot is, let's say that there is someone who has had experience investing successfully in real estate. A typical example would be, look, I own either a small retail shopping center or I own 10 single family houses, and they say, I have been able to succeed in real estate. Why in the world would I participate in a deal where I'm only getting 70% of the proceeds as opposed to 100%? Like, what's some of the examples you give for why active investors, or not only, I wouldn't say full-time professionals, but people who have had some success, quote, trying their hand at real estate, what examples would you give them or reasons would you give them for contemplating the passive approach to investing?
Well, I found that a lot of passive investors don't have those investments you're talking about. It sounds very active to me, Hunter, actually. So,
sure.
If I have 10 houses, I consider that pretty much active, very active, in fact. And so one of the alternatives investing in syndications that we both offer is that you are, in fact, very hands-off, and it is truly, truly passive.
Got it. So I guess what I'm saying is, many of our investors, especially if you're dealing with accredited investors, they typically have some kind of experience investing in real estate. It doesn't have to be that significant, but let's say they have like 3 single family houses, for example. And I feel like they are actually still primed to take advantage of the passive approach to investing. Mm-hmm. Are you following what I'm saying before I kind of continue on? Does that make sense?
Yeah. So, but these are investors who actually, they own the houses, they manage them themselves.
Yes, but my guess, what I'm really getting at is that it's usually at a much smaller scale, and it's not as scalable, first of all, and also it's, how do you position that conversation to convince people who have had moderate success actively investing that, look, they should try this play either for diversification purposes or a variety of other reasons?
Well, that's a good point. I mean, so what you're saying, the argument is, why should I invest in a syndication when I can just buy a rental property? And, there's a variety of considerations. First of all, it's a lot less work to invest in a syndication. Once you found an operator who does a good job you can trust, you just keep investing with that operator over and over again. It's just you simply wiring funds to an account and count your distribution checks. It's pretty much that easy. Versus if you have rental property, even turnkeys. I mean, a lot of people say, "Oh, I invest in turnkeys," and that is largely passive until things start going sideways, and then all of a sudden you find yourself managing 10 houses somewhere across the country. And the other thing also is it is diversification on the one hand, but it's a hedge against risk also. I mean, you got 3 or 4 houses, 1 or 2 go vacant, and now you've lost like all your cash flow across that portfolio, and you don't have that problem in a kind of syndication. So much less passive, much simpler, and less risky, in my opinion.
Yeah, I really like that, especially regarding the diversification of the tenant base. One of the things that we're really cautious about is investing in properties that are too small. And there's a lot of reasons for this. One of them is if you have 5 units and 2 people move, you're going to have some challenges with paying off the debt, most likely. So if you have 200 units and 50 people move, you still might be okay. It's pretty remarkable like that because you get the economies of scale. One of those things is that a property manager, they may need to make $50,000 a year, but that's not necessarily going to be increasing with the number of units. So you may have to pay them $50,000 a year to manage a property with 100 units or $50,000 a year to manage a property with 200 units. Same thing is true with self-storage. So one of the requirements we look at is I like to typically invest in self-storage deals where there's 40,000 square feet or more. That usually gives you about 500 units of self-storage or 500 tenants. So that tenant diversification is a big part of that conversation. It's hard to get that diversification outside of syndications because it's very unlikely that someone's going to have $10 million to buy a 200 unit property, for example. So let's kind of transition into some of the challenges. Kind of playing devil's advocate here. What are some of the challenges that you see with passive investing? Is it for everyone? Are there certain people that you think should avoid it? Are there any massive mistakes that people can make when investing passively?
Yeah, I mean, I think you can always make mistakes. Clearly, I think the critical factor is the operator that you're investing with, and so a good rule of thumb is don't put all your eggs in one basket. As you basically get to know these operators, ask them questions, see if they do what they say they're going to do. Can you trust them? Do they have a track record? And then just invest the minimum amount with that operator and see how they operate. How do they communicate with you? How are they doing? Maybe something's not going right. How do they handle that? And I find that most passive investors who are doing this as a strategy, they're investing with like 1 or 2 people. Like that's it. It's not like they have 10 operators they're investing with. It's not like you're getting a diversified portfolio of 10 different mutual funds. It's not like that at all. And so I think the biggest challenge is getting into the game, finding that operator that does a good job. That's probably the biggest challenge. And the other one is just fear, I think. I remember when I essentially took all of my money out of my financial advisor, like, oh my gosh, that was like crazy. The idea of now I'm managing all of my money. Like, why am I taking this money from the actual expert who never really was beating the market, by the way, and that it can be very, very stressful. And, what I advise is people, don't take an entire portfolio don't sell your stock portfolio. Take a part of it and just start getting into the game, because what happens is once you make an investment or maybe 2, you see the process play out and you're like, oh my gosh, it's number one. It's not so bad. It's not so complicated. It's not that, it's not that complicated, and it's really cool. And then you can start over time taking out more and more of your stock portfolio, because once you get it, there's really no good reason to leave your money in the stock market.
Man, I'm not going to argue with you there. And, I'll tell you what, when I started getting into the space, especially back then, it wasn't very popular. And to a lot of people, if I would just explain the structure, to be honest with you, it sounded to me like it sounded to them like it was an infomercial. I was saying, look, I'm going to give them $50,000 and they're going to give me about $4,000 a year or so. And that's all that's going to happen. I'm just going to wire them the money and it's going to slowly come in at that $4,000 a year clip. And I'm pretty much not going to have to do anything. Most people, the first thing they hear when they think that is, this is just fraud. This is just a Ponzi scheme. Like, I cannot tell you how frequently that question came up. But then you look at the other side of things. I want to hear about when you made that choice to fire your financial advisor, because I did the same thing and it was scary. Like, I actually was researching the topic and I interviewed I had a financial advisor. I just knew from the relationship that they weren't like super aggressive, and I just felt like they didn't have much of a market advantage. So what I decided to do was go out to interview like 5 different financial advisors, and I interviewed them all, and I realized this is all BS. Sorry, no disrespect for any of the financial advisors that have a unique business model or something like that. But when did you make that call, and did you come to a similar realization?
I came to the realization that I was going to pursue this financial freedom thing, and I was going to use my capital to do that. And again, I think I was probably a little extreme, and I don't really advise other people to do that. So I literally said, okay, I'm taking everything and you're fired, essentially.
Right.
But typically I would say, hey, start small, because everybody can take out $50,000, $100,000 and just, invest it to see what happens. And that's normally what I advise. I don't advise someone just to sell their entire stock portfolio, because that's fairly stressful. I think getting someone to do that and wrap their heads around that. Then you also have the other challenge of how do I deploy all this capital? Mm-hmm. Because what you don't want to do is just take, and this was a mistake I did. In addition to getting started in the restaurants, I passively invested in everything that had a heartbeat, essentially. I was like, I got to deploy this money right now, because if not, I'm not earning anything, and I need me some passive income. So I was super aggressive on deploying my capital, like unnecessarily so. And it was probably because of that. It's like, okay, now it's all sitting in a bank account. That's great. But now it's really not earning anything at all.
Right.
And that was unnecessary. It was kind of a mistake. So I do think a slower transition probably is much more reasonable.
Yeah. And I hear you there, because you put that pressure on yourself because it was sitting in cash, and definitely familiar with that. I mean, when I did it, I ended up keeping the stocks as is and slowly cycling into the world of syndications, which, by the way, I think I'm 99% or 95% into syndications or similar alternative investments. But if I had sold the stocks and had it sitting in a checking account, basically, I would have felt a lot of pressure to allocate that capital and probably would have made a lot more mistakes. So definitely sympathetic to that. When it comes to the students that you've had over the years, what are some of the biggest hurdles that people have when it comes to pursuing financial freedom? You already mentioned fear. That's obviously a huge one. Talk us through how you overcome that fear in your students and any other challenges you see when people are kind of hitting that hurdle saying, I'm struggling to accomplish whatever this is.
Yeah. So, but just to be clear, when we have students, we're typically working almost exclusively with active investors. These are people who actually want to find deals and raise money and that kind of stuff. Because I find that on the passive side, while you should educate yourself, the learning curve, while it sounds unbelievably complicated, is actually much, much lower than the actual art of finding deals. What do you say to brokers? How do you evaluate deals? How do you raise money? Like, that level of complexity is order of magnitude higher. So when you say students, I'm automatically thinking active investors.
Thanks for the clarification.
But with regards to fear, how do you overcome that? I think it's, I talk about this law of the first deal. And it really originally started with, of doing your first deal on the active side, because what I've observed is that first deal is always the hardest to do, takes the longest, and typically the smallest. And when that happens, as soon as that deal happens, the second and third deal, this is on the active investing side, the second and third deals simply come automatically in rapid succession. Like, it's almost, you become this deal and this money magnet. And I think it's the same thing on the passive investing side. I think the way you overcome that fear is by simply making an investment. By making that investment, you learn so much, because leading up to that, you're going to have conversations, you have questions, you're going to get answers to questions, you're going to learn about the asset class you're investing in, you're going to learn about the operator, you're going to learn about the market, you're going to learn about how to evaluate opportunities, and you're probably going to look at some opportunities, let them pass by. So by the time you actually invest, you will actually have built up a fair amount of knowledge on what it takes. So I think really the way you overcome that fear is by educating yourself, and that learning curve is it's not nearly as high as in the active side. And then by simply just making that first investment.
Very cool. Anything else besides just hesitation, procrastination, for example, anything that you found can be a major burden on people who are either, like, let's say they want to be full-time, but they're not quite yet, time management, for example. Anything else that comes to mind in terms of the complaints you get? Let's say, look, I can't do this because of X.
Yeah, I mean, passive investors, busy people. That's what I'm finding, and so it's going to be less likely that they're going to join you for an hour-long webinar. When in the active side, they're like, I'm gonna, as much as I can attend, I'll do that. So they tend to be busy people. I think from a passive investor side, there's a lot of work up front to kind of get into it and to find an operator like, trust. But once you find that operator, it's like, people just continue investing. You'll get another email from your favorite operator. Hey, we have another deal. Okay, great. Send me the legal docs. I'm just going to DocuSign and wire the money.
Sure.
So there's a little bit of work up front, but once you've done the work and you found a good operator that you like to invest with, the effort goes close to zero. And then at that point, your job is simply just to reinvest all your savings as you make it with that one or those two operators.
Makes sense. So I'm in the process right now, and I'm not 100% sure if I've mentioned this on the show before. I think I have. I'm in the process of writing a book right now. It's about raising capital. It's going to be out on December 2nd, which is Cyber Monday. And one of the things I'm excited about in the book is something that I call the key success indicators. These are traits that are really indicative of the fact that you're going to be a high performer. The reason it's mentioned in the book is a really great way to supercharge your career is to have mentors that are kind of helping you along, especially those that you can get for free. So I wanted to know, especially as it relates to the people that you're helping on the active side of things, right? So the more involved students that you have, when you have a mentor or student and you're like very clearly can say this person's going to be a rock star, what are some of those characteristics or traits that they have that make you confident that they're going to be successful?
Yeah, I mean, probably two things, hustle. They have hustle and coachable. They're kind of intertwined. So what I mean by the hustle is they're prepared to do the work and they take responsibility and they're coachable. They'll actually do what the coach says. If you don't have one of the two, then it's very difficult for you to be successful. Just in anything, whatever you do, even if you're, trying to lose weight or quit smoking, whatever the case may be, whatever that is. If I were to boil it down, that's probably the two traits that I think if I see those two in combination, that person is going to have a very high degree of success. I would say it's close to 100%. The only variable will be how long will it take?
Yeah. Well, look, you just dropped a total bomb on the listeners, to be honest, because it's crazy how you've seen a lot of students and you're saying it's close to 100%. And those are the two things. So by the way, if you feel like you're lacking in either of those two traits, you need to ensure that those two are up there in terms of your proficiency. And a lot of times on this show, I talk about focusing on your strengths 100%. I completely still stand by that. But there's certain things that you just simply have to have. And I completely agree, by the way, hustle and coachable. And by the way, you can see those very, very quickly. And if you can get up to 100% in terms of, yes, it's going to be a success, it's just a matter of how long, boy, oh boy, that is a changing in the risk profile of what we're talking about here. So appreciate you sharing that with us. I want to talk about the podcast for a second because I know this has been an incredible resource for you, not only in terms of attracting investors, but also, growing your network and educating thousands of people, maybe even yourself as well. The podcast medium has just gotten really, really popular, and there's some risks and benefits to that at the same time. I wanted to get your thoughts on the current state of the medium, where you see it going, and where you see just generally your thoughts about the podcast, the popularity of it.
Yeah, I think even though we feel like it's oversaturated and it's like, my gosh, everybody and their mom is starting a podcast right now, I still feel like we're in the early stages of it. And even if I just look at my own, friends and neighbors or things like that, very few people actually listen to podcasts. It's surprising. And I think as a number of podcasts come out, the more people will start listening to podcasts. And I think that people who have had podcasts now for 1, 2, 3 years, they're going to have a benefit. They're going to have, iTunes is going to rank people who have more episodes out, who've had traffic and track record and consistency. And those then will be awarded with, higher rankings inside iTunes. So it's like one of those things I think about, oh my gosh, is getting too oversaturated. Am I going to drown in this? And I haven't seen that. I have seen lots of people start podcasts, but I think at the end of the day, I think the audience is still so large that we're all still going to grow together. I think it's kind of like, like educating the masses about investing in syndications. I think it's going to be the same thing here. All these podcasts, people are going to, listen to radio a lot less, or maybe even watch less TV and start listening to more podcasts as a way for not only entertainment, but for learning, which is also one reason that audible.com is the audiobooks are so popular, actually more popular than the Kindle versions of books. So I do think there's still a lot of opportunity in the medium.
Yeah, I couldn't agree more. And I think that your comparison to the fact that syndications have supposedly gotten so popular is very fair, right? There's trillions of dollars out there. There's trillions of dollars investing in the stock market. There's trillions of dollars investing in negative interest rate bonds. when you listen to a bunch of podcasts and you're kind of, quote, in the scenes, it feels like it's me, Michael Blanc, Neil Bawa, and Joe Fairless just going around doing it. Everyone's like that. No, it's not the case at all. Like, we are very much the niche. And if you're listening to the show, you have incredible insight into something that not a lot of people have a lot of insight into. And if you share this stuff with your friends, most of them are going to be pretty impressed and pretty interested, because it's just now starting to really get steam, which is really awesome. So back to the question about the podcast thing, though. Obviously, you've been doing this for a long time. Your show has a lot of reputation, a lot of reviews, a lot of, you've impacted a lot of people's lives. How do you plan on continuing to stand out, given two things: the tailwinds that you're kind of talking about in terms of the popularity of the podcast, but also that saturation that you're referring to?
Yeah, I mean, I think what's, and this, I'm going to answer this question not only in terms of myself, but anyone who's thinking of starting a podcast, especially in this environment. Like, if I didn't have a podcast right now, I might be saying to myself, you know what, there's so many people out there, I'm not even going to bother. And I think that's a mistake. And the answer to your question is, how do we stand out? That's a question you have to answer for yourself. And really what I kind of think of, what is my brand? Who am I? What do I want to be known for? And if I figure that out, then I'm going to attract a certain person, and I'm going to repel another person. So, for example, I think you mentioned earlier, I'm all about financial freedom with real estate. Like, that's my thing.
Yeah.
And I can do it with active investing. I can do it with passive investing and somewhere in between. But if you want to be financially free, you can come to me. If you want to be rich, you can go to Grant Cardone, for example, right? Grant Cardone has got his jets and his Rolls Royce. And if you want to be a millionaire, you're going to be attracted to Grant Cardone, and you're going to be repelled by my message, and vice versa, right? People that are coming to me because they want quality of life and financial freedom. They don't necessarily want to be rich. It may be a side effect, but that's not what motivates them.
Yeah.
And so everyone has got a unique offering. Just because I have the same exact topic podcast that you do or you do, we're all going to be different. I mean, you mentioned some of the people in the space, but we're all a little different. And we're all doing very well. It's surprising. Like, why would someone not come to me? Well, because they're attracted to someone like Grant Cardone and vice versa. So there's enough opportunity. I think the big thing is, what is your brand? How are you unique? And really being mindful of that, because if you don't stand out, you're not going to succeed. If people don't know what you stand for, they're not going to bother to listen. Now, once you know what you stand for, and I would almost associate a mission with that. So what you stand for, what is your mission? It clarifies your decisions. It clarifies the kind of guests you bring on, the topics you talk about. And when you do that, you remind the listener what your mission is in every single episode. They're reminded, oh, now I remember why I'm listening to this. Now I know why this person is on the show. Sometimes, and especially new podcasters, they just bring people on the show, and you listen to a few episodes, you're not exactly sure what is the purpose of the podcast. Like, why should I listen to episode 4 and 5 and 6? Because I'm not exactly sure where this guy is going or this gal is going. So it's really important to develop that brand, what you stand for, and that mission, and then infuse that into everything that you do.
Man, I just recorded, I do a segment called Monday Minutes where I talk about things for about 5 to 10 minutes about investing, about building a brand, about a lot of the stuff that we're talking about today. And I wish that we had this conversation before recording this most recent episode, because you just nailed it. You just really nailed it. And it's about standing out. It's, if you know that Michael Blanc is the financial freedom guy, anytime someone brings that topic up, that's the guy. And the key there is that it sounds like, it's like, okay, Michael Blanc, he's the financial freedom guy, meaning that they're going to come to you. Don't think about it, you going around trying to chase around people, convincing them that financial freedom is the way to go. That's not really what happens. It's they will find you, especially in the world today where everyone's interconnected. So when you guys listen to that Monday Minutes, probably next week, remember this. This is a really important thing, clarifying your mission so that you can actually know which niche you're going to be in. But the most important thing that you said, that there's all these people in the space and they're using the medium appropriately and they're all doing very well. So don't think that your interestingness, whatever you're bringing to the table, whatever makes you unique, is going to repel people. There's so many people listening to shows right now. You're going to attract those that are compelled by your particular niche. So that's awesome. I really like that. One more question about marketing. What are some of the strategies you're using right now that you think are most beneficial? Obviously, the podcast, like we mentioned, is a great vehicle and a great medium. Anything else, any tips or hacks that listeners can learn from?
Yeah, what real estate investors have to realize at a certain point is that the real estate investor is in two businesses. One is real estate investing, and the other one is essentially online marketing. Two separate businesses, and they're very, very much intertwined. And this is particularly relevant when you're raising money. So as a syndicator, you're raising money, or if you're a passive investor who wants to raise money and become a capital raiser, you're always raising money. And once you've exhausted your personal network, the question becomes, how do I find more investors? The only way to find more investors is to essentially build a platform that attracts and engages investors so they invest with you. And at the heart of that, and we talked about the brand, at the heart of that is the brand. You have to know what your brand is. How are you unique? Once you know that, though, you kind of have to build your list. And so to answer your question, what is at the core, what's a key takeaway is the average investor does not know anything about online marketing. I'm going to change this, Hunter. I'm working on stuff to change this because it's such a common thing with investors who think that we're actually in the real estate investing business when we're actually not. And at the core of that is really the ability to build an email list. There's different facets to that, but really it's building a list. It's the value is in the list and how you engage that audience. So in other words, you don't necessarily looking for quantity, but you're looking for quality of those. Imagine having 1,000 accredited investors on your list. Now in the list building scheme, that's a tiny list. It's like it's a baby list. But from a money raising perspective, Hunter, how much money do you think you could raise with a list of 1,000 accredited investors?
Millions.
So it's not like a huge thing, but you got to start studying online marketing. Now, I did this to build my educational business, and I really never connected the two to the passive investing until about a year ago. I'm like, oh my gosh, I'm such an idiot. I'm not doing anything for my passive investors. Therefore, I'm barely raising any money because I'm not actually doing what I'm doing on the educational side. So at the heart of it is you got to build your list. Okay, so here's what this means in really quick terms. Obviously, we can spend 3 hours on this. But essentially, you need a website that represents your brand, and you need some kind of what I call a lead magnet. A lead magnet is some kind of free download. This could be a free report, or it could be some kind of tool of some sort. So I have a report that's called, and this is aimed at the passive investor, it's called "What's the Better Investment, Stocks or Real Estate?" ? Right? And people are like, that's an interesting topic. Let me download that thing. And all I want from you is your email address. So now I have a lead in my email database, but now what do I do with it? Okay, now I need to engage that person. I need to build trust with that person. And eventually I want that person to, quote, join my investor club. When they join my investor club, they have to fill out a form. They then have to have a phone call with me. And once we get to know each other, now I can actually offer some investments to that person. And so it's a matter of attracting and then engaging that person so that I can build trust with that person so they eventually invest. But at the heart of that is the list building and engagement.
Yeah, it's pretty interesting, especially since, I find myself, I'd say it's about 50-50, and that's part of that is the fact that we do partner with operating partners that are 100% focused on the operating side of the business, especially those that are willing to work with us. I think it's a good fit. But the reason that it's about 50-50 for me in my day-to-day is that it is really about growing that list and engaging that and nurturing those leads. So just to put things in perspective, 1,000 people, like you mentioned, that's a baby list. If they're accredited investors and they can invest, let's say, $70,000 in a year each, that's $70 million. That is a ton of money. If you could raise $70 million, it would be one of the largest funds that was in the non-institutional space right now.
Right.
So that's what's at stake, guys. And that's why this conversation is so important. I'd love to have you on again to just talk exclusively about that because I know it's something you've focused a lot of your efforts on. But our time is coming up. Anything else you wanted to touch on before we jump off?
No, it's great. I think this is a really worthwhile topic because I'm really excited about sharing this whole thing about passive investing and syndications, and as I know you do. So I appreciate what you're doing to educate the masses. And the more I talk about it and I see the reaction, once I see the light bulb go off for investors who have traditionally invested in the stock market, it's just so exciting. And people always think, oh, why would they, I don't want to beg for money. You're actually not begging for money. You're actually offering them a service and you're providing value to someone who's got a major problem. Number one, they don't know where to invest their money that provides consistent income, predictability, and pays less taxes. And that's a problem that we, with commercial real estate syndications, can solve. So I'm just really excited about that message, and I appreciate what you're doing, and I want to thank you for having me on the show to kind of talk more about that.
Yeah, absolutely. I couldn't agree more. And it's going to be really exciting watching more and more people get awakened to this, especially since the younger generation, which is really into the podcast space, starts to become a higher percentage of them are going to be accredited investors. They're more interested in investing in things through relationships they've made on the internet. We're going to be in a really exciting spot in the next 5, 10, 20 years. Michael, can't thank you enough. Before you jump off, though, let the listeners know how they can learn more about you and your firm.
Yeah, my website is themichaelblank.com. That's THE Michael and then BLANK.com. And that report I was talking to, just put a /report on top of that, even though I'm sure your listeners don't need that because they know all about syndications already. But we have free resources. We have YouTube channel, a podcast. The book is on Amazon. It's called Financial Freedom with Real Estate Investing. So yeah, those are different ways people can find me.
Great. So we'll link to that in the show notes page. Michael, thanks again.
Hunter, thanks so much.
All right, listeners, thanks for checking out the episode. As always, the contact information for our guest will be available in the show notes page, which is hosted on SoundCloud, iTunes, and Stitcher. Don't forget, if you want access to some of the free goodies that I'm talking about at the beginning of these episodes, like free ebooks, weekly investor emails, and articles about some of the most important investment-related topics, make sure that you have created an account with CFC because this stuff is automatically available. You can do this by going to cashflowconnections.com and signing up as an accredited investor. Of course, if you have any questions, feel free to email me at hunterthompson@cashflowconnections.com. Thanks again.